How's it going, everyone? I'm Matt, and in this video, I will be discussing 3 stocks that I'm watching very closely, and you should be too. These stocks are all dividend-paying stocks that could be great investment opportunities if you could get them at the right price. If you're looking for stocks that will have massive upside potential in the immediate future, this particular list isn't for you. In my opinion, the following companies are ones you would want to invest in and grow with over the long term. I wouldn't consider these 3 stocks to be the best opportunity in the current market, but rather ones you should have on your watch list and consider buying if they dip in value. All right, let's get started. The first stock on this list is Microsoft. Microsoft is and has been a juggernaut of a company. You most likely know them from their staple products such as Windows or Microsoft Office or their gaming console, Xbox. These are all solid products, but the main reason Microsoft makes this list is because of its development in the cloud. Azure is the name of Microsoft's cloud computing platform. The company has been heavily investing in cloud operations, which has been paying off because Azure continues to grow in popularity. Beyond that, there is a strong argument that the cloud computing sector itself will continue to rapidly grow over the next couple decades. I personally think Microsoft is well positioned to ride this wave. Microsoft's dividend yield is a modest 1.08%, but it's been growing over the past consecutive 10 years. The payout ratio for this past year was a nice 35%. Some basic research will show you that their balance sheet is in excellent condition. When you consider all this, it's no surprise that their dividend safety score is 99, the highest possible score. At the time I'm making this, Microsoft is trading above $190, which is all-time high territory. I'm not a fan of buying at record highs, so I would be looking for a pullback in price. Personally, I would be happy to own the stock near the $150 mark. The second stock on this list is Home Depot. This well-known company is the world's largest home improvement retailer. Home Depot was one of the few businesses that remained relatively unscathed by the virus that halted the world economy. In fact, the company saw a boost in overall sales because many people decided to complete their DIY projects while they were stuck at home. Home Depot's dividend yield is 2.34%. Like Microsoft, this dividend has been steadily growing over the past decade. For this past year, the payout ratio was 57%. I know many investors look for payout ratios below 60%, so I want you to know that this stock still meets that criteria. Home Depot has been an incredibly consistent business over the past few decades, which includes multiple market downturns. This tells me that it's fundamentally a strong business, and it explains why it has a high dividend safety score of 87. Home Depot is currently trading above $250, which is also an all-time high. I do think it's an excellent company, but I would prefer to own it around $200. If there's ever a dip close to this price level, I will definitely be investing. The third stock on this list is United Health Group. This Goliath of a health insurance company is the largest in the United States. I personally think owning a health insurance company is a smart play because regardless of what's going on in the economy, people still get into accidents, get sick, and need health insurance. The dividend yield of United Health Group is currently 1.62%, and it has a decade-long track record of growth. The payout ratio for this previous year was a very conservative 29%. I don't expect to see as much upside potential in UNH as Microsoft or Home Depot, but it makes up for that with its extreme safety. Unless something drastically changes in the healthcare sector, you can always count on this dividend, which is exactly why it has a perfect safety score of 99. United Health Group stock is just north of $300. Like the first 2 stocks I discussed, this is record high territory. Most large companies within the US are near all-time highs because the S&P 500, the overall market index, is once again approaching record levels. In my opinion, UNH is closer to being fairly valued than Microsoft or Home Depot. Don't get me wrong, I would still love to buy it at a discount. I just wouldn't expect a notable drop anytime soon. Those are the 3 dividend paying stocks I think you should put on your watch list. At the right price, they could all be an excellent addition to your long-term investment portfolio. Do you agree with the list? What stocks do you always watch? Let me know in the comments below. If you're interested in investing and don't have a trading account yet, you could get started with Robinhood or Webull. The links are in the description of this video. Once you create your account, you would be rewarded with a free stock. You can never go wrong getting a free stock. It's pure profit. If you found value in this video, let me know by hitting the like button. I'm close to my goal of 1,000 subscribers. I would truly appreciate your support in getting there. Thanks for watching and best of luck in the markets.
Microsoft Azure. Azure.